This is our Forex blog for September 3rd, 2012. And like we do most days, we want to buy the strongest currency versus a weak and sell the weakest versus a strong. This is our currency meter, which I've actually modified to show up using 5-minute charts versus range charts. The actual study itself uses multiple different tools and time frames, some of them using range-based data. But I found that it works better on a 5-minute chart because that way you can see the length of time it was strong, how, or in this case weak, 15 minutes of strength here, an hour of weakness, brief strength, weakness again, 20 minutes of strength, and so forth. Before, by putting the same tool on a range chart, if the market was active, there'd be a lot more range bars, and if it was inactive, there'd be very few range bars. Sometimes over a 12-hour period, you would have just maybe 30 bars total instead of letting you see a more clear depiction of how strong and weak and how long it was strong and weak. So this shows the strength or weakness on the top. Underneath that, the real time. Underneath that, we have a 15-minute trend, hourly, daily, weekly, monthly. And I really have been experimenting with putting this range-based real-time tool, which averages out multiple time frames, back on a 5-minute, which is what we kind of did in the past. So, you can bring up our sortable currency meter, right-click on each chart, and change it from a 5-hour chart to a 5-minute chart. And, some days you'll have more bars, other days you'll have less bars, but at least each bar is a 5-minute period. You could use a 3-minute time frame, 10, 15, it doesn't matter. The real-time tool uses whatever the longer time frame and other time frame data is. So one of the first steps of our 3-step easy Forex trading system, just bring up our currency meter and sort it. You got the Euro, Swiss, which are tied together. Oops, hold on. Swiss is the strongest, and the Euro, the Pound, the Yen, and the New Zealand and the dollar are the weakest right now. So basically what you're looking to do is buy the strongest versus the weak. You can see the New Zealand was pretty much weak across the day. The weekly and monthly longer term time frame is down. After the strength subsided last night and the weakness came back, you can see the hourly stayed weak the whole time. The weekly and monthly stayed weak. So around 2:30 right here, what's one of the stronger ones? Well, you can see the dollar was moderately strong, and the yen looked weak. So you basically would be looking to sell the New Zealand dollar. So our 3-step easy Forex trading system is, number one, identify the currencies most likely to trend up or down. Weak New Zealand, strong dollar. Let's take a look at selling the New Zealand dollar. And you can see, it's looking at the chart, we're underneath the hourly moving average, which means it's likely to go down. Here is Friday's most traded price, 98 or 80.29. This is last week's most actively traded price, 80.21. And these are both used as filters. Underneath there, when they're underneath both of them, it's much more likely to trend down. Of course it does. This is Friday's value area low. Underneath this price, you're likely to get breakouts. And you can see, here's Friday's low down here. This is a good 24 pips away from this area right here, and you got into the breakout much sooner than the previous day's low. And you can see it went down. You have a pullback trade here, it went down. Not the most volatile continuation pattern, but it was a very high probability trade. Let's look for some other trades here. The Swiss, very strong from 7 to 11. The dollar was also moderately strong from 7 to 11. So let's take a look at the dollar Swiss. You really want to avoid buying or selling two currencies that are both strong or weak. And you can see when they're both pretty much strong all day, you have a very choppy 20 pip range. Obviously, this was more likely to go down than up because this is last week's value area low. This was Friday's value area low, and it wasn't able to get back above there all day. When it finally broke down, you had some kind of a movement. But you want to avoid buying or selling two currencies that are strong or weak. A lot of people just randomly pick and trade a currency, the euro dollar or the dollar Swiss, with no idea whether currencies are both strong or both weak for the day, and they tend to, most people would have lost money in this up, down, very tiny, low volatility range. You can see the Swiss, very strong. The New Zealand was very weak. This is not a currency I typically trade. It's not one of the ones I leave running overnight, but if we bring up the New Zealand Swiss, you will see that this also was a very high odds probability one to be looking for sells. And of course, pretty much fell all day long, about 60 pips it looked like. And there's a lot of ways to trade this. You can bring it up on a range chart. One very easy method of trading is just putting on a moving average, which is much more advanced than just a simple moving average. It's using digital signal processing, very advanced math. I put a 5 period, shifted 2 bars to the right. And basically, once you find a trend, wait for some kind of a pullback. So you might have went short right here. You would have a small loss. Short again right here. Nice win. Short again right here. Small win. Short again right here. If you shorted this right here, you probably broke even. Shorted again right here. Maybe you made a little bit, and then you made a lot, and you made a little bit. Very easy method to trade, and it works better on a range-based chart. Another one that was very weak most of the day was the Australian. So you want to look to sell the Australian dollar also. First thing, by looking at this chart, hourly moving averages right here. This is one of the filters we use. Underneath that, we look for sells. Above it, buys. Here is Friday's average price, and more than likely, the previous week's average price is above the price, because this is last week's value area low. So this is obviously in a very strong downtrend. You're looking for sells. It wasn't the most volatile day due to the holiday, but it did, trend down. It's going to be a short blog just because, of the holidays and such. The CAD, longer time frame, daily, weekly, monthly trends up. Obviously, you could look to buy the CAD, sell the New Zealand CAD. This one's also going to trend down. You can see, and typically when a currency makes a big move, I usually like to see, a little bit deeper pullback. Something very minor like that. It's a pretty risky trade. Usually at the lows, I will give it 2 chances to go higher. If it can't, I'll sell it right here. I won't sell it right here. And then when it makes a little bit deeper pullback right here, this is a pretty decent sell, and it falls. Also, always draw your fibs on there, because typically currencies, if they move too far, they'll at least retrace back up to the 38%. And it doesn't always touch it, and a lot of times it does go up to the 50%. If you short right here, you have a very high probability of having a losing trade, and you're going to have to get back into that trade up here. So you're usually better off just having patience, accepting the fact that you might miss a good trade just by being cautious, being conservative, and not wanting to take low odds trades. A low odds trade could work or might not work. They typically work less than they do work, and occasionally you miss a big trade, and that's just the way it is. The euro, the longer time frame trend was mostly up. The weekly trend was pretty slight right here, but it never went red. And so, when you had some strength right here and very little weakness, when that strength comes back in around 10 right here, what's one of the weaker ones? Well, the New Zealand was. So you can buy the Euro New Zealand. Look at that nice move up. 10, 20, 30, 40 pips. Just all day long. And anytime a currency's, I tend to trade with the trend until it moves 3 or 4 waves. So this is 1 wave up, 2 waves up, sideways. 3rd wave up is usually the end of it. And I might take a trade like this, but if it only pulled back 10, 15 pips, I would avoid it. This is a decent 30, let me see here, yeah, about a 30 pip pullback, so that's nice. And if you draw your fibs off the previous wave up, it gives you a great idea of where the profit target is. And most of the time, it's probably a few pips underneath the second fib target that's just out of sight up here. You can also, if you want, draw the fibs off this last little tinier wave. It's a little bit less likely to predict the max high. This is a 42 pip move. So if you bought right here, and it shot through the first one, I usually, if it shoots through the first one, I get out of the whole trade here at the second one. If it stalls at the first one, I'll get out of half. If it comes down and hits my trailing stop, I'm out of the other half. If it shoots up and hits the 1.618 second fib target, I tend to get out of the whole trade there. Let's look at what other currencies were weak when the euro was strong here. The Australian was also, and you can see actually from 6 to 11 it had less strength on the up moves than even the New Zealand did. So the euro Australian probably has less of a pullback than the euro New Zealand did. So you can see that right here, almost no pullback at all. And the currency meter showed you that the euro was strong and the Australian had no strength at all during these little sideways phases. And you get into that trade when it goes above the displaced digital signal processing base moving average. And again, it shot through the first one, so I'm out of the whole trade right here. Usually that's the maximum it will go. Sometimes it goes a little bit higher. You can see it went up to 0.7. It's only 5 pips above the 1.618. So don't be greedy. And if you see it go up there, you can always wait for it to hit the trailing stop. You might have picked up one more pip, but I'd rather be out and done for the day after a big or a nice 20-30 pip win. One other way of trading, which I will bring up, and using, instead of the histogram, you can use colored bars. Let me find one of them. Here's the euro yen. There's probably some times of strength here. This one came down and found some support at the hourly. The bars go green, it breaks out. And the darker they are, it keeps you into the trade. When you're in a trend and they start to go light green, you might want to get out of half your trade. That's another way of trading instead of just using the histogram. Here's the New Zealand yen. We all know how weak the New Zealand was. So especially once it made a lower low, pulled back, the bars, you had a little bit of dark green bars and then they go red. Usually if it goes 1 pip below that bar, you can get short, and this is very likely to be the max low of the day because it's our Fibonacci areas that I do each night. Remember, on low volatility holidays, you're not likely to make as many pips, so these are very high probability places. Notice how it touched this area to the pip, went up a little bit, came down and touched the 1.618. You'll be surprised how often that happens. The Fibonacci areas are, they're almost magical, but they're only magical because everybody believes in them and uses them. Or I should say, the traders that make a difference, the ones that have billions of dollars at their disposal, use them, and that's why they work.